The economic data in the U.S. has been fairly positive, showing a V-shaped recovery in things like retail sales and housing and even durable goods orders. Where does that shape go from here, as one of the big questions we ask as a fiscal stimulus package remains elusive and an election, of course, is at hand? Michael Feroli is the chief U.S. economist with JPMorgan. Great to have you with us, Michael. Appreciate your time.
Thanks.
I do want to start with, we've seen the data, and it's impressive. It's an impressive set when you look at, housing and retail sales and durable goods, and you think, I'm reminded, it never does to count the American economy out. All too often you do, and you're wrong about that historically. And yet there are some big headwinds here. So what's your thought about where those data points go from here?
Right. So I think this Thursday we're going to see that in the third quarter the economy expanded at 35% annualized pace. I think in the fourth quarter things probably will slow down for one simple reason. The third quarter growth was reopening the economy. Now the economy has been largely reopened. Obviously there are pockets that remain shut, certain restaurants and things of that nature. But a lot of the reopening is behind us, and so naturally that is going to remove one of the supports to growth. That said, there is still some further reopening, so that's a positive. I think there are three headwinds, however, that we're facing. One, and the most important one, is the increase in COVID cases. Second is we are going to be, at least for a few months here, dealing with a lack of fiscal support, which has been very important over the past few months. And then third is the uncertainty around the election, which could cause people to hold off on activity until that uncertainty is resolved. So we do look for growth to be positive in the third quarter. We're looking for about a 3% annualized pace, but obviously something a lot less resounding than the 35% pace we saw in the third quarter.
What are you factoring in terms of that fiscal stimulus package? And I want to put that in the context of, back in May and June, we talked about the fiscal cliff coming once the check stopped rolling in July. It didn't happen. I mean, there's a lag effect on these things. How much longer can the consumer and the economy hold on without the help that they were getting?
So we have been impressed by the resilience of the economy in the absence of further fiscal support. And I think that probably speaks to the power of the reopening. That said, it would be nice to have some insurance here against any downside risks from an increase in COVID case counts. We don't think that we're going to see anything probably until after inauguration. So right now, we don't have any fiscal support penciled in until February at the earliest. And so that does really, I think, create a bit of a test here for the U.S. consumer. So far, as you mentioned, much of that support faded in late July, and yet we've continued to do pretty well. So I think they've passed the first test, but it's not over. And it's a wild card for the next 2 or 3 months.
And of course, it comes with the other wild card and the great unknown, and that's the path of the pandemic. If we should get the kind of drag we think we're going to get, I mean, even if we look at the data today and assume that this is sort of where things will stand, we won't get additional reopening. We won't get a full bounce back of activity. What do you start to think about in terms of job losses that then become a little bit more structural and less temporary in nature?
Mm-hmm. So first thing I would point out is that in July, we had at least in the States, a pretty decent increase in case counts. And that didn't really correlate when we looked across states with differing relative economic performance. So that's one reason to be hopeful here, that even as we have a public health crisis still unfolding, that doesn't necessarily have to be an economic crisis. That said, things could be different this time because we are going into the winter months. So far, we aren't seeing the types of restrictions on activity that have prompted a lot of growth downgrades in Europe, for example. But we can't rule that out, just given the speed with which cases are increasing. So right now, I still think the path is one in which growth remains positive. But again, we are all as forecasters and as humans, we're all at the whim of the virus right now. And so we can't be too confident that that positive growth will be sustained.
We got to ask you while we have you about how you're factoring in results from this election. And I know the markets sort of seem to be trying to sort out, does a Democrat win mean more fiscal stimulus, or is there a drag from taxation? Where do you land on kind of the pros and cons versus Trump versus Biden?
Yeah, so I think with a so-called blue wave, Biden with a Democratic Senate, we could be in store for a pretty substantial fiscal stimulus early next year. We know the priorities of the Democratic Party as expressed in the HEROES Act, which is passed by the Democratic-controlled House of Representatives. That contained about $2.5 trillion of additional fiscal support. So if we got something like that early next year, that'd be a pretty significant boost to the economy, even if it came alongside somewhat higher corporate and personal taxes. In a configuration in which Biden has a GOP Senate, we might see quite a bit less, I believe, fiscal support. And I think the interesting one is if Trump is reelected with a GOP Senate. In that case, we probably do get some sort of stimulus. That certainly seemed to be something Trump, the president, aligned himself with in the past 2 months, even if he hadn't really expressed all that much interest over the summer. So I think in that configuration, we probably might get an additional $1 trillion in stimulus. But I think the most stimulative, the most expansive outcome would be a blue wave. The least expansive would be a Biden win with the GOP Senate.
Right. Michael Feroli, great to have your thoughts. Really appreciate it. Michael Feroli is Chief U.S. Economist with JPMorgan.